Cam Currie is not a name that many retail investors might know, but for the last few decades, he's built one of the most successful mining investment companies. Currie Metals and Mining operated out of the Konnert offices. And Cam and I met a few months ago, and I was trying to convince him to come on my podcast because I knew how much value there was to be unlocked in his brain. He wasn't doing a lot of media. He was busy doing deals and being an investor behind the scenes and financing a lot of the best companies in this sector. So I really wanted to get him in front of my audience. And after a handful of conversations, he came on, and we've had a few great episodes since then, covering themes like de-dollarization, geopolitics, and the gold market. Today, what I want to focus on is capital allocation. And so joining us on stage are the CEOs of 3 companies that Cam has invested in. And as I said before, they joined me on stage. And if you were at my workshop yesterday, rule number 5, follow the smartest money. After some conversations with these companies, having them on my podcast and doing my own diligence, I'm now a shareholder as well. Again, I never tell anybody what to buy, but I'm very happy to explain why I did. So first of all, thank you so much for joining me up here today.
Thank you, Jay.
And I want to start with you, Cam. I want to pass the mic to you and I'd like to hear you break down how you see. So up on stage right now, we have 2 gold companies and 1 silver company, and we're going to get into that in a minute. So to kick us off, it makes sense, Cam, if you could lay out your precious metals outlook for us and how you read the market right now.
You're looking at like a 3 to 5 year horizon, or just the?
Yeah, let's take it there.
First of all, to get a little bit of my history, I've been 35 years in the investment business, but really became a specialist in the metals and mining space back in 2001 or 2000 when I saw the dot-com bubble. And at that time, there was a super valuations. Nortel represented 35% of the TSX, and the gold industry was left and abandoned. And so at that time, I rolled up my sleeves and said, there's such a compelling opportunity in the space. Gold was at $265 an ounce, and nobody was paying attention. And fast forward 7 years later, we were involved with 8 takeovers. We sold to seniors and mid-tiers. And so really the key was cultivating a relationship with a lot of clients, corporate clients. All 3 of these gentlemen are corporate clients of mine, and getting into the intel of the industry. And that's one of the things that's absolutely important. So fast forward to today, the investment environment today reminds me of 2002 when no one was paying attention. You know, as an industry person, and I've heard this from a lot of people that I do business with that are high-profile individuals, we have gold at $2,000 an ounce and a complete disconnect from the equities. And it's been very, very, very frustrating because you look at these companies, these 3 companies in particular, that have made significant progress in their assets, and yet their shares have depreciated. Fortunately enough, I've lived through those cycles before, and it's a strategy of just staying with great assets, great management teams. So going back to the forecast for gold, I think we're going into a very strong gold market as US dollar de-dollarizes. We've seen that partly. Most people don't know this, but in China, for example, the second best performing asset for investors in China in 2023 was gold. So the Eastern world sees the value of gold. The Western world continues to sell off all the gold ETFs, and they aren't paying attention to this de-dollarization move. So I think we're in for a very, very exciting next couple of years. And a lot of the companies in this room who are finding it very difficult to find investors, they're going to get some attention. But you do have to stay with, in my view, the tier companies that are expanding, growing, and exploring.
So I'd love you to walk me through your decision-making process, Cam. You look at a lot of deals, so how do you get to the no? How do you get things off your desk so you can get to the good stuff?
First of all, I have an incredible team at Konnert. So when I look at my Currie Metals and Mining group, I have my bankers, my analysts. We have a global team of 55 people. We meet at our conference every year. So I get a lot of intel from people like that. On top of that, I do business with a lot of principals. And so repeat people. Like Patty, for example, he's been involved with a number of companies that have been taken over. And if you can put up with his humor, he's a great person to do business with. But again, going back to, it's not about weeding them out, it's about staying with pedigree. Great management teams, great assets. In the case of Mike and Vizsla Silver, the discovery was made. I didn't get involved till 6 months later, when I actually realized it wasn't just a one-shot wonder. And since then, the growth of this asset, I'll leave that to Mike, has been absolutely spectacular. So it's not about flushing them aside, because there's over 2,000 mining companies listed on the TSX. It's sifting through the top ones and then going through the process of where they are in the cycle as well.
So I want to pass the microphone down the panel now and have you each introduce your companies and take your time, explain the value proposition. We'll just go down the line. So Michael, I'll start with you. Vizsla Silver, probably sitting on the largest undeveloped silver project in the world. Walk us through it.
Yeah, exactly. Thanks, Jay, and thanks, Cam. It's a pleasure to be here and among such esteemed companies like you gentlemen. I appreciate it very much. Vizsla Silver did a lot of things that people said we couldn't do. Basically, we had an early option deal that was quite an encumbrance for us to take over the project and to consolidate this Panuco district for the very first time in modern history and make these discoveries. But we were able to do that. We beat the odds with making some extremely high-grade discoveries on veins that had never been explored before, and we applied modern science to an ancient district, basically, and we're very successful about that. And now we've gone from, a nice high-grade resource a couple of years ago to what you said, the world's largest undeveloped high-grade silver resource. And this is at a time where, silver is more in demand than ever. The deficit of silver supply is growing every year. The demand on the monetary side is growing with global instability and global uncertainty. So, we're starting to really see the investment thesis for silver pick up at a time where Vizsla is performing better than it ever has before. We found so much silver there. Every time we update the resource, the grade goes up. That's often very rare. It is very rare. You don't see that often. And Vizsla has all these telltale signs of being a tier 1 silver asset when the world needs it, which is so important. Now, we've only explored, and our resource sits on 10% of the known veins in this district. As I mentioned before, we consolidated this district. I spent a year down there in Sinaloa, Mexico, working with the families, piecing these land packages together. And the end result is now we have a very large district. It's the size of Greater Vancouver here. It's like if you were to drive from Mount Seymour to the Richmond Airport, that'd be like driving across our district. It is very big, and we've only explored a very small portion of it. So this year ahead, 2024, is all about further discovery. We may find another center of mass like we have already. I think it's highly likely that we find another center of mass, and discovery is what made our stock go from 15 cents to $3.50 historically. So discovery can certainly still drive a lot of value for us. But at the same time, we're de-risking the resource that we have and driving that towards production. The end goal and our vision has always been to become the world's largest single asset silver primary producer at our project.
The world's largest single asset primary producer. Okay, thank you, Michael. And we're gonna pull on some threads in a minute. Patrick, over to you. Orezone Gold, newly in production, Burkina Faso's newest gold mine.
Thanks, Jay, and thanks, Cam, as well. As Cam has said, I've worked with them for many, many years. So, look, I'm not an explorer, I'm a mine builder. For me, it's really important to look at something that I think can be built into a mine. There's a lot of discoveries out there, but will they actually become a producer? Probably not. Mike's sitting on something, absolutely. You're sitting on something that will become a mine. What I've learned over the years is you look for a system, particularly a geologist who knows to take a discovery and see that it can become a mine. Geologists can fall in love with things because they've discovered it. Does it mean it's a mine? No, it does not. So I look at it, can I actually take it, build it, finance it, and actually make it into a producing asset? Sometimes you get taken out, that's great, somebody else buys you, but it's still a mine. It's still going to become a mine. Why did they take you out? Because they see it as a mine. And so we look at things, can we make it, build it with the capital that we know we can raise without blowing up the company, so we can get the debt, the equity, so you've still got a lot of return for your shareholders. Then build it, and then from there, you take that asset and hopefully build from there on in. With Orezone, we've done that. I took over the company when it was, I think, Cam, in a little bit of trouble. And we turned it around, changed the management, changed the business development plan, financed it, brought in a very large private equity group who did a lot of due diligence. We then financed it and built it during COVID, which was a challenge, I got to say, particularly in an African country. You are remote. Logistics became a problem, but we got it done, and we got it done under budget, on time. We've just finished our first year of production. We've met all our metrics, and now we're looking to go to the next stage. And a few things have happened in there. You have to put a team that you trust, a team generally that you've worked with before, that know how to execute on your business plan, who know not to panic when some little thing goes wrong. Because I can tell you, running a mine, things happen. It's not like making a widget. Things happen all the time. You've got to know how to deal with them, and you've got to have people around you who know how to do that. And then you look at the support that you have in country, your connections in country, all of those things that you need to have to run it properly, so you don't wake up every day with a panic. You've got a business plan, you execute it. And that's what we're doing. We're now looking to become the next mid-tier producer in West Africa. My vision for this company is within the next 3 to 5 years, we're upwards on the 600,000-800,000 ounce a year producer in West Africa. And it's a great place to do it because it's still heavily underexplored.
Thank you, Patty. And just to call on some things that Patty shared there, again, I'm going to shout out my own workshop, but yesterday, rule number 2, people over everything every single time. What Patty just shared is that it's a guarantee in this business and in any entrepreneurial journey, but definitely in the mining business, you're going to run into massive, massive problems. And so you want to find the people and bet on the people who are really good at running through walls, right? And surrounding themselves with people who fill in their blind spots and weaknesses. And a lot of chat about team there. Ryan, over to you. Calibre Mining recently merged with Marathon, creating a high growth, cash flow focused, mid-tier gold producer in the Americas. Walk us through the company, please.
Yeah, sure. Thanks, Jay, and again, thanks, Cam, for the invite to be a part of this. And first of all, before I do that, I just wanted to ask the audience that are here, and don't be shy, how many have actually invested in a gold explorer or a gold producer, just by way of hands? So you can see there's quite a number of you that have done it, but there's also quite a number of you that have not. And sometimes we wonder why. I mean, we're generating some fantastic products here, and as Cam mentioned, we're trading at, the gold price is trading at $2,000 an ounce. And we realize this is a cyclical business, but gold equities and precious metal equities today, Sprott just recently put out a piece. They said gold equities are trading as though the gold price is $1,200 or $1,300 an ounce. So this is presenting a very compelling opportunity in the gold equity space. And it's only a matter of time before that starts catching on. As Cam said, in the 2000s, and there was an epic run through that period of time. We're in a very similar macroeconomic landscape. And so, Calibre Mining, who are we? What do we do? So, Calibre had been an explorer for quite a while. We transitioned and restructured the company in 2018 to become a gold producer. The executive team went out looking for gold production opportunities that could be either expanded upon, they could be potentially optimized, and to every one of these gentlemen's points, which is really highly critical, it's really about the people that can deliver on those promises. And fortunately for Calibre, we have a very significant veteran CEO. His name is Darren Hall, who's been in this business for 30 plus years as an operator. So he was a very significant part of building Newmont, one of the largest gold mining companies in the world. In fact, they placed him at various assets through his career to optimize assets in different parts of the world. He did that. In fact, when he left Newmont, he was overseeing 15,000 employees and about 40 to 45% of all of Newmont's EBITDA. Okay, so a very experienced individual that knows how to optimize assets. And take it back to Calibre, it was in 2019 when we acquired some assets that at the time we envisioned 50 to 70,000 ounces a year of production. And so fast forward to today, that has grown 20% year over year since that time. Those same assets this year will produce about 240 to 260,000 ounces. And all along, we didn't go back to the market to issue shares. We used operating cash flow to reinvest back into the business to drill. And I think that's a real big focus here, because one of the reasons why share prices outperform other companies. Share prices perform, as Michael said, he went from 15 cents to $3.50, right on the back of this world-class discovery. If you don't drill, you won't find. And fortunately for Calibre, we generate a lot of operating cash flow that allows us to reinvest back into the assets. We've grown our reserve base about 380% since taking over these assets, and we've grown production. But I think, you know, in terms of valuation, there's a massive disconnect from where we are today, where we're going, what the opportunity is in front of us. So we're a multi-asset, multi-jurisdictional gold producer, and continue to reinvest in the business and regularly put out news to the market. It's like a story. If you're not telling a story regularly to allow investors to understand what's happening, you're not going to capture that value. So that's who Calibre Mining is.
But you have an addition to your family with Marathon, though. Just the expansion.
Yeah, well, indeed, and so here we come to the most recent transaction for Calibre. So we started in Central America. We've grown that business. We went to Nevada and we grew the business through a gold producer in Nevada and a great exploration upside opportunity. And then given what I just said in terms of valuations, where the company valuations are at, we saw an opportunity where we could significantly tier up in terms of our jurisdiction, in terms of our mine life and quality of assets. So some of you may not be familiar with this name, but a company called Marathon Gold was developing a Tier 1 asset in a Tier 1 jurisdiction in Canada, Newfoundland, Canada. We're just closing on that transaction to transform the company from a 250, 300,000 ounce a year gold producer to a 500,000 ounce a year gold producer through this transaction. So it's a transformational shift for us. We're just closing that deal now. And fortunately for Calibre, that asset is already 50, 60% through the construction of the project. It's not at a feasibility study stage, it's actually developing that property now. So we're fortunate that that's the case, and the case then is being in gold production in Canada in the next 12 to 18 months. So very, very exciting opportunity for us.
Ryan, I want to stick with you for a minute, and then we'll come back this direction. Can you talk about the importance of optionality in this business? For anybody who's not familiar with what that is, I mean, you can find a great deposit. Sometimes that's not enough. Speak to that concept for me a little bit, if you don't mind.
I guess you have to be willing to endure the good times and the bad times. And, you know, not all exploration companies are going to find a world-class deposit. And unfortunately, you know, this is the cycle that, or the sector that we're in terms of you've got a lot of great exploration companies here. Some will be successful, some won't. And where you want to focus on, in my view, is working with particular management teams that are that have the ability to see when it's time to pivot, when it's time to look at a new approach to business. And you know, frankly, that was us in 2018 as an Explorer Co. with history of delivering on production opportunities through different companies, but more importantly, being able to pivot and look at the opportunity to say, okay, rather than stick with this asset, let's look at new opportunities to add value for our shareholders. And I think that's what you're referring to, Jay?
Yeah, 100%. Thanks very much for that. And Patty, over to you. We've had a ton of conversations on this stage today and yesterday, affirming the importance that investors are familiar with their time horizon. And they have some idea of what their time horizon is when they enter a position. People are impatient, right? You build a position, you want to get paid tomorrow, very frequently. Having conviction in what your time horizon is gives you the tenacity to weather the short-term volatility. You've been in this business a long time, that takes patience. So can you speak to that from the mindset of an investor and help counsel retail investors who are trying to stomach the volatility built into this business?
Great question, Jay. I think, look, the mining business is a cyclic business. If you don't understand that, you shouldn't be in it. Really, it's not building widgets, putting them on a shelf and trying to sell them. It is a cyclic business. And you have to have a huge amount of patience to be in it. And again, that's got its rewards if you are patient. Look, we all love great discoveries and a great drill hole and it drives a stock, but at the end of the day, the mine's still got to be built or the project's still got to be taken over, etc. So you really have to have the people in your team that understand what the time cycle is. And that can be from drilling out a great deposit, now you've got something you can build, to finding the debt package that you want to live with, that you can build the mine with. I cannot overemphasize that. The destruction of capital by taking a debt package because you just want to build a mine. No. Look at your shareholders. And one thing I look at all the time is, are the principals highly invested with their own money, not with stock options, with their own hard-earned dollars in that company? They're going to stick with it because they've got their capital involved. And sometimes you just got to turn down a package and wait for the next thing to come along, because otherwise you can absolutely destroy a company that way. So looking at the cost of capital, taking your time, and sometimes, like I've done deals, a lot of them, where I've sold assets that I truly loved. The very first time that Cam got involved with me was a company called Vizsla. I wanted to build that mine. Absolutely, it was my baby, my idea, my first big time in the business. And somebody came in and made us an offer, and I sold it. I didn't want to do it, but it was absolutely the best thing for the company and the shareholders, because we would have destroyed the company if we had taken on the debt that we were looking at that time. The company took us over. They had a cheaper cost of capital. They had the capital there available. They built it the way we want to build it. They kept our team to build it, and it became a huge success. Other teams I've looked at where we've just gone in, we've seen an opportunity, it's somebody else has screwed it up, jump on it, fix it, great opportunity. I'm not an explorer, I'm a builder. So I love exploration, but I look at it, is it a mine? Take your time, do it right.
Michael, over to you. Looking for value in this sector. I tell people over everything every single time, but that's also the ace up my sleeve. I run a conference business, I host a podcast, I talk to people all day, every day, so that's what I do. And I can play that game better than most, right? If I was a geologist, I'd probably play the game differently, but I'm not. So what would you share with this audience in terms of key, most important indicators that drive share price performance? Is it the people? Is it the asset? Is it the jurisdiction? What stands out in your mind?
Unfortunately, a lot of times it's luck.
I love that.
But you have to work hard to get lucky, and that's the key. You have to, for us, and I run a group in addition to Vizsla Silver. Most of my time, 95% of my time is on Vizsla Silver, but we have a group called Inventa Capital, and the hardest thing for us is not to find assets, it's not to find shells, it's not to find opportunities, it's to find someone that can back the business and put their own money in and really want to be a part of a business and grow a business. And I think it's actually almost case by case when you have to meet these people, and that's why this conference is so important, right? To come to a booth, say hi to a CEO. Each of us, we've been at our booths and talking to investors, and I think that's actually a really important part of this business. It's a people business. Half of us in the room probably don't understand the 43 101s and the technical information. But you get a sense of, does this CEO believe in this? Are they buying with their own money? And I think that's so important, to get a chance to meet these people.
Can I just add to that? Driving share price performance, absolutely the people. Obviously comes down to the asset in the ground as well, but also timing, right? If your macro narrative blends with the product that you're delivering, whether it be an exploration success, whether it be a delineation and potentially a takeout, and whether it be a producing opportunity, producing uranium, lithium, gold, if the macro narrative globally is going in your favor, you're going to have huge share price performance versus others in a different commodity, right? So timing, I think, is really critical in looking at when to invest in certain things, and that's not easy. But quality professionals like Cam, with the experience, knows to look at and how and when, because of how much attention we pay on the macro in this global world.
I love that. And by the way, I think calling out luck as a key indicator is it's awesome and absolutely true. It's also true that the harder you work, the luckier you get. And that's another argument I would claim why the people are the most important factor, because you want the durable entrepreneur who's okay getting knocked down, and they have a plan C, right? Because plan A and B probably aren't going to work. That's just the nature of an early stage business. Bezos calls this at bats, right? It's not about trying to hit home runs, it's about trying to get to the plate. And the home runs just happen. And they happen more frequently the more times you get to the bat, right? So I love the take, man, and I think it's a humble approach and a very accurate one. And it's largely how this industry works. I mean, we're looking for minerals under the surface. It's a treasure hunt. Cam, same question over to you. I know you have a lot more in terms of your operation, how you analyze companies. You go a lot deeper in your diligence than most because you can and you have to, right? You're not just investing your own cash. You got a whole a client book. You're the stewards of their capital. First, okay, so am I on the money with people over everything every single time? And then what's next? Or how do you, in terms of that value ladder, where do you start, most important, and where do you go from there?
Well, I guess a good example are these three companies on stage. Each one of them I own differently for the unique characteristics. In the case of Vizsla Silver, as I mentioned, I didn't get involved until 6 months into it. Then I realized the Napoleon discovery was something very meaningful. So I think first time I called Mike up, I think I met with Mike and Craig 3 times in a week. I just could sense that these guys were onto something big. And so fast forward, these guys went into a district which had 122 drill holes historically and had been mined for decades. And they made this discovery, blind discovery. So fast forward to today, in 3 years, their new last resource, 330 million ounces of silver. And they've only looked at 10% of the district. And so the scalability of other discoveries and probabilities are extremely high. So when you have a situation that already has a very solid asset base as it sits right now, with significant exploration upside, and to mirror the fact it's also 1 hour from Mazatlan, and it's right beside the highway, which makes it nice for having a margarita, it's a great property tour. But no, the delivery of what they've executed on. In the case of Paddy, sure we have a history with numerous companies in the past, but his execution of on time, on budget, one of the lower quartile cost miners in the business, but huge growth. And that's the significance. And Paddy, as he said, has put a lot of money into the company himself over a number of years and continues to do so. But he has a growth platform. Some assets out there have 3 to 4 years to permit. So it's kind of a dead money zone from my perspective, because they have to go through all the permitting and 43-101, all this studies, First Nation relations, government relations. So those projects could be great projects, but their timeline of performance may be limited because they have to raise capital through this whole process. With the case of these two companies, they're on a trajectory of growth. They're well capitalized. In the case of Paddy, they've got the bank financing for the expansion, and they're going to build a mid-tier. In the case of Ryan's project, another example, I saw a management team go into a country where the assets were producing 80,000 ounces, and I looked at that and went, okay, there's huge growth prospect. And that message came very clear from Darren Hall, who's the CEO that Ryan was referring to. And in 3 years, they went from a $50 million debt position an 80,000 ounce production to a 285,000 ounce producer with 110 million US in the bank. And so that's a very successful growth platform. And now they're making this acquisition on Marathon, which I'm also a very big investor in, and had something to do with this relationship. Now they're going to grow it to 500,000 ounces. And so they have a lot of levers to execute value and growth. And so all three of these companies fit that criteria for different reasons. And I'm going to say one other thing. We lost 3 great analysts at Konnert over the last 4 years. Each one of them went to one of these companies. Michael Pettengale went to Vizsla because he saw the opportunity. Kevin McKenzie went to Orezone because he saw the growth prospects. And then Tom Gallo went to Calibre because he saw what management was doing, what the growth was. So when your analyst leaves you and goes to work with these companies, these are other telltale examples of maybe you should pay attention.
That's an excellent story. Look, thank you for sharing. Thank you all for joining me on stage today. Cam, thank you for putting this together. I really appreciate it on behalf of my audience. Thanks very much. Let's give him a round of applause, everybody.